Before direct deposit, before credit scores, before a 17-digit routing number determined whether you could buy a house, Americans ran their financial lives without banks. They earned, saved, traded, and built wealth using skills that required nothing more than their hands, their reputation, and a community that operated on trust instead of transaction fees. The banking system did not create American prosperity. It moved in after prosperity was already built and started charging rent. Between the founding of the country and roughly 1950, the majority of American families handled money in ways that left almost no paper trail. They bartered labor, stored value in livestock, extended credit across a kitchen table, and built saving systems no institution controlled. Number 14 was how most families transferred wealth for 200 years. Number 2 generated more household income than wages did for a third of the country. And number 1 made all the others possible. Subscribe and hit the bell, because the money skills they stopped teaching when the banks showed up are the ones you were never supposed to learn. If you think Americans knew how to handle money long before the banks told them how, hit subscribe and tap the bell, drop a like, and tell us in the comments which of these skills your family still practices. Now let us count them down. Number 20, reading soil and weather to predict a harvest. Isaiah, a farmer in 1890, could pick up a handful of dirt, smell it, feel the moisture content between his fingers, and tell you whether the field would produce 40 bushels of corn or 20. He watched the behavior of animals, tracked the patterns of frost, read the sky at sunset, and made planting decisions worth thousands of dollars based on knowledge that no bank statement could quantify. That skill was money. A farmer who read the season correctly planted the right crop at the right time and brought a full harvest to market, while his neighbor who guessed wrong plowed under a failed field. The difference between the two men was not capital or credit. It was knowledge passed down across 3 generations of watching the same piece of ground. The modern food system has industrialized farming to the point where this skill seems obsolete. But for the growing number of Americans returning to small-scale agriculture, market gardening, and homesteading, reading soil and weather remains the difference between a productive season and a wasted one. The man who knows his land does not need a loan officer to tell him what to plant. Number 19, tanning hides and working leather. Wasn't defined there were no deposition thefts. A deer hide worth 50 cents as a raw skin was worth $3 as finished leather in 1910. The tanning process took weeks and smelled terrible. But the man who knew how to do it turned a hunting byproduct into a material that could be sold to cobblers, saddle makers, and harness shops. A trapper who tanned his own hides earned 6 times what a trapper who sold them raw collected. Leatherwork extended beyond tanning. A man who could cut and stitch leather made belts, holsters, knife sheaths, harnesses, and repair patches for boots. Every one of those items had cash value in a community where leather goods wore out constantly, and the nearest factory-made replacement was a 3-day ride away. Handmade leather goods sell for premium prices in 2026. A hand-stitched leather belt brings $40 to $120 at a craft market. A custom knife sheath sells for $30 to $80. The tools cost less than $200 to get started, and the raw materials are available from hunting, farming, or wholesale suppliers. The skill takes months to develop. The market for the product has never disappeared. Number 18. Keeping bees for honey and wax. A row of hives along the fence line was a small treasury that managed itself. Bees required minimal labor, foraged their own food, and produced 2 saleable products. Honey sold for 20 cents a pound in 1920, and a healthy hive could produce 40 to 60 pounds per year. Beeswax sold to candle makers, furniture polishers, and pharmacists at a price per pound that exceeded honey. A family running 10 hives could harvest $80 to $120 worth of honey and wax in a good year. The hives cost almost nothing to build, and once established, a colony sustained itself for years with only seasonal attention. The beekeeper's labor amounted to a few days of work spread across the spring and fall. The income arrived without a time card. Beekeeping has exploded in popularity, and the economics are stronger than ever. A pound of raw local honey sells for $8 to $15 at farmers markets. Beeswax candles sell for $10 to $30 each. A backyard beekeeper with 5 hives can generate $1,500 to $3,000 in annual revenue on a hobby-level time commitment. The bees do the work. The beekeeper collects the profit. Number 17. Blacksmithing and metal work. The blacksmith was the second most important person in any American town behind the doctor, and in some towns he was first. He made and repaired every metal object the community needed. Hinges, nails, horseshoes, tools, wagon parts, fireplace hardware, and kitchen implements. His forge was a manufacturing plant, and his skill was the difference between a functioning farm and a pile of broken equipment. A blacksmith in 1900 charged 50 cents to shoe a horse and $1 to forge a new axe head. He could earn $3 to $5 a day in a busy town, which put him among the highest earners in the community. The skill took years to learn through apprenticeship, and a trained smith could set up shop anywhere there was a population that used horses, plows, or wagons. Blacksmithing has returned as both a craft business and a practical skill. Custom forged knives sell for $100 to $500. Decorative ironwork for homes brings $200 to $2,000 per commission. A smith with a portable forge can demonstrate and sell at festivals and markets. The coal and steel cost less than the finished product by a factor of 10. The skill is the markup. Number 16. Distilling spirits for trade and sale. Before the federal government decided it deserved a cut, a farmer with surplus grain had 2 options: sell the corn for a penny a pound at market, or distill it into whiskey worth 50 cents a gallon. The math was so obvious that George Washington ran one of the largest distilleries in Virginia. The still turned a perishable crop into a shelf-stable product with 10 times the value per pound. Whiskey served as currency on the frontier. It was lighter than grain, did not spoil, and was accepted in trade by every merchant, tavern, and neighbor within 100 miles. A jug of whiskey bought a new axe. 2 jugs bought a piglet. The farmer who distilled was not just making a beverage, he was minting money from corn. Craft distilling is legal with proper licensing in most states, and the market for small batch spirits is booming. A micro distillery producing 500 gallons of whiskey a year at $30 per bottle can gross over $50,000 annually. The licensing and equipment costs are real, but the margins on craft spirits exceed almost every other agricultural product. The still is not just history, it is a business plan. Number 15. Midwifery and herbal medicine. The midwife delivered babies, set broken bones, treated fevers, and mixed herbal remedies for every ailment between the cradle and the grave. She did not have a degree. She had 50 years of accumulated knowledge passed to her by the midwife before her, who learned from the one before that. Communities paid her in cash, food, firewood, and labor. A birth brought $5 to $10. A house call for a sick child brought whatever the family could spare. Her medicine cabinet was the hedgerow in the garden. Willow bark for pain, chamomile for sleep, elderberry for colds, comfrey for wounds. The remedies worked well enough that rural communities relied on them exclusively for generations before a licensed doctor appeared within 50 miles. Certified midwifery pays $50,000 to $100,000 annually. Herbalism has a thriving market through teas, tinctures, and salves. A home herbalist selling at farmers markets can generate $500 to $2,000 a month. The knowledge base is available through books and courses. The demand for plant-based remedies has increased, not decreased, since 1850. Number 14. Passing down land instead of cash. Well, for 200 years, the primary way American families transferred wealth was through land. A father who cleared 80 acres, built a house, and fenced the property had created an asset worth decades of wages. When he died, the land went to his children, and the children started their adult lives with a place to live, a way to eat, and collateral to borrow against. Land held value when currency did not. Through every panic, depression, and bank failure in American history, the family that owned its land outright survived because the land produced food, shelter, and trade goods regardless of what the dollar was doing. The 40-acre farm was a savings account that could not be frozen by a bank holiday. Real estate remains the most common form of generational wealth transfer in the United States. A family that owns property free and clear and passes it to the next generation gives that generation a financial foundation that takes most people 30 years of mortgage payments to build. The land does not care about interest rates, stock market crashes, or banking crises. Your great-grandparents knew that. The bank would prefer you forgot. Number 13. Coopering, wheelwrighting, and woodcraft. The cooper made barrels. The wheelwright made wheels. The cabinet maker made furniture. The carver made tool handles, bowls, and spoons. Every one of these men took a tree which cost nothing but labor to fell and turned it into a finished product worth 20 to 50 times the value of the raw lumber. A barrel that held flour, whiskey, or salted pork was worth $1 to $3 in 1880. The tree it came from was worth a nickel. Woodworking skills allowed a man to furnish his own home, build his own outbuildings, and produce trade goods during the winter months when field work stopped. A farmer who spent January and February in his workshop turning out chairs, tables, and buckets had spring inventory worth $50 to $100 that sold as soon as the roads cleared. Custom woodworking commands high prices today. A handmade cutting board sells for $40 to $150. A turned wooden bowl brings $60 to $300. A piece of handmade furniture can sell for thousands. The tools cost $500 to $2,000 for a functional workshop. The wood is often free or cheap from local sawmills, storm damage, or land clearing. The skill converts a nearly free raw material into a high-value product, same as it did in 1850. Number 12. Running a cider press, or grist mill. The man who owned the cider press or the grist mill owned the bottleneck in the local food economy. Every apple grower in the county needed his press in October. Every grain farmer needed his mill year-round. He charged a toll, usually a tenth of the product processed, and kept a steady supply of flour and cider that he consumed, sold, or traded without spending a cent of cash. A grist mill processing 500 bushels of grain a year kept 50 bushels as payment. At $1 a bushel, the miller earned $50 annually just from his toll, plus whatever he charged for custom grinding. The press and the mill were expensive to build, but they lasted for generations, and they created a natural monopoly in any community too small to support two. Small-scale milling and pressing have returned as artisan food operations. A cider press producing 500 gallons at $8 per gallon generates $4,000 in seasonal revenue. A small flour mill producing stone-ground flour at $6 per pound serves bakeries and markets. Equipment costs have dropped. Demand for locally produced staples continues to rise. Number 11. Spinning, weaving, and textile production. Before the cotton mill made fabric cheap, every yard of cloth in America was produced by hand. A woman who could spin fiber into thread and weave thread into fabric held a skill worth more than most men's trades. A bolt of homespun linen took weeks to produce and sold for $2 to $5, comparable to a month's wages for an unskilled laborer. The raw material, flax or wool, came from the family's own fields and flocks. Textile production occupied the winter months when outdoor work slowed. A woman who spun and wove through December, January, and February could produce enough fabric to clothe the family and sell the surplus. The spinning wheel and the loom were capital equipment that paid for themselves within a season. Hand-spun yarn sells for $20 to $60 per skein at fiber festivals. Hand-woven fabric brings $30 to $100 per yard. The fiber arts community pays premium prices for handmade materials. A spinner with a flock of sheep produces raw material for free and converts it into a product that sells at craft market margins. Number 10. Keeping community ledgers and extending informal credit. Before banks arrived in small-town America, the general store owner kept the books. He extended credit to families between harvests, recording purchases in a ledger that both parties could review. A farmer who bought $30 worth of supplies on credit in March settled the account in October when the crop came in. No interest, no credit score, no application. The collateral was the man's name and his history of paying what he owed. The system worked because the community was small enough that reputation was visible. A man who stiffed the merchant lost access to credit from every store, every tradesman, and every neighbor in the county. Social enforcement was faster and more effective than any collections agency. You paid because everyone knew if you did not. Informal credit networks still exist in immigrant communities, church groups, and close neighborhoods. Lending circles, where members contribute monthly and take turns receiving the pool, move billions annually without a bank involved. The model is older than banking and runs on the same fuel: trust between people who know each other. Number 9. Butchering and meat preservation. A man who could butcher a hog, salt the hams, smoke the bacon, render the lard, and grind the sausage turned a $15 animal into $60 worth of food that lasted through the winter. The skill saved the cost of a professional butcher and produced preserved meat that replaced months of purchases at the store. A family that butchered 2 hogs and a steer in November had a meat supply that carried them to April. Butchering was a community event. Neighbors helped each other on hog killing day, sharing labor and dividing the cuts. The man who owned the knives and knew the anatomy directed the work. His expertise was compensated in meat, in returned labor on his own butchering day, and in the standing that came from being the person everyone needed in November. Home butchering is legal and practical for anyone who raises livestock or purchases whole animals from local farms. A half hog bought directly from a farmer for $200 to $300 yields 80 to 100 pounds of pork. The same meat at supermarket prices would cost $500 to $700. The skill takes 1 supervised session to learn. The savings repeat every year. Number 8. Building and repairing with hand tools. A man with an axe, a saw, a hammer, a plane, and a chisel could build a house, a barn, a fence, a bridge, and every piece of furniture inside the house. The tools cost less than a month's wages and lasted a lifetime with proper care. The skill they enabled was worth more than any salary because it eliminated the need to pay someone else for the most expensive purchases a family would ever make. A family that built its own home in 1870 saved $300 to $800 in labor, 1 to 3 years of wages. The home stood for generations. The man who built it never made a mortgage payment because he never needed a loan. The house was equity created from sweat, skill, and timber that cost nothing but the labor to fell it. Construction skills still eliminate costs at every level. A homeowner who can frame a wall, install drywall, run basic plumbing, and wire a light switch saves $50 to $100 per hour in contractor rates. A family that does its own renovations saves tens of thousands of dollars on a single project. YouTube has replaced the apprenticeship. The savings are the same. Number 7. Seed saving and plant breeding. A farmer who saved seed from his best plants every year did not need to buy seed in the spring. That saved $5 to $20 a year in the 1800s, a meaningful amount when the total cash economy of a small farm might be $200 annually. But the real value was deeper. A farmer who selected seed from the strongest, most productive, most disease-resistant plants in every harvest was breeding a custom variety adapted to his exact soil and climate. After 10 or 20 years of selection, that farmer's corn or wheat or beans outperformed anything a seed catalog could offer because it had been shaped by the specific conditions of his land. The seed was intellectual property before the term existed. It was also insurance. A man with a jar of proven seed in his barn did not depend on a supply chain to start the next season. Seed saving is legal, free, and increasingly popular with home gardeners and small farmers. A family that saves seed from its garden, eliminates the annual seed purchase, and develops plant varieties that perform better each year. The commercial seed industry would prefer you buy new seed every spring. Your great-grandparents would have considered that an absurd waste of money. Number 6. Producing maple syrup, sorghum, and natural sweeteners. Sugar was expensive and often unavailable in rural America before 1900. Families who tapped maple trees in February, boiled sorghum cane in October, or kept beehives for honey produced their own sweeteners and never sent a dollar to the sugar refinery. A family producing 10 gallons of maple syrup had a product worth $10 to $15 that cost nothing but firewood and labor. Surplus syrup and honey sold easily at the general store or to neighbors who lacked the trees, the equipment, or the skill. A farmer who produced more sweetener than his family consumed had a reliable cash product that brought income every spring without planting a single seed. The trees did the work. The farmer collected the sap and tended the fire. Maple syrup sells for $40 to $60 per gallon at retail. A backyard operation with 20 taps can produce 5 to 10 gallons per season, worth $200 to $600. The equipment costs $100 to $300 for a basic setup. The trees are free if you own or have access to sugar maples. Your great-grandparents made syrup because sugar was unaffordable. Modern producers sell it because customers will pay 4 times the price of corn syrup for the real thing. Number 5. Running a ferry, a toll bridge, or a freight service. Before paved roads and government-maintained infrastructure, private individuals built and operated the crossings. A man who ran a rope ferry across a river charged 5 cents per passenger and 10 cents per wagon. A busy crossing could earn $2 to $5 a day. A toll bridge cost more to build but lasted longer and charged the same rates. The man who controlled the crossing controlled the commerce. Freight hauling operated on the same principle. A man with a wagon and a team of horses moved goods between towns for a fee per mile per pound. He did not need a bank account to collect payment. He needed a strong back, a reliable team, and a knowledge of the roads. A teamster hauling freight in 1850 could earn $30 to $50 a month, enough to buy land within a few years. The modern equivalents are everywhere. A person with a truck and trailer who hauls, moves furniture, or delivers materials earns $50 to $200 per job. A weekend of hauling generates $400 to $800. The ferry is gone, but charging money to move things from where they are to where they are needed has not changed in 2 centuries. Number 4. Wild crafting medicinal plants for sale. Ginseng, golden seal, black cohosh, and dozens of other medicinal plants grew wild in the forests of Appalachia, the Ozarks, and the upper Midwest. A man who knew where to find them and when to harvest could collect $50 to $200 worth of dried root in a single season. Ginseng alone sold for $3 to $8 per pound of dried root in the early 1900s, and the best diggers harvested 20 to 40 pounds in a good year. The knowledge of where specific plants grew and how to dry them for sale was guarded and valuable. A ginseng hunter's territory was as closely held as a trapper's line. Fathers passed the locations to sons. The plants were money growing in the forest floor, and the man who knew the forest knew where the money was. Wild ginseng sells for $300 to $800 per pound of dried root today. Golden seal brings $30 to $60 per pound. The harvest is regulated by state permits in most areas, but legal wildcrafting remains a viable seasonal income source. A careful harvester who knows the terrain and follows sustainable practices can earn $2,000 to $5,000 in a fall season. The plants are still there. The knowledge of where to find them is the only thing that has gotten scarce. Number 3. Storing value in livestock instead of currency. A cow was a savings account that gave milk. A breeding sow was an investment that produced 12 to 16 piglets a year. A flock of sheep was a mutual fund that paid dividends in wool and lambs. Before the banking system reached rural America, livestock was the primary store of wealth for millions of families, and it had one advantage that money in a bank never could. It multiplied. A farmer who started with 2 cows and a bull could have a herd of 20 within 10 years without spending a dollar. The herd ate grass that grew on land he already owned. The calves sold for $10 to $20 each. The milk produced butter and cheese that the family consumed or sold. The wealth grew biologically, independent of interest rates, inflation, or the solvency of any financial institution. Small-scale livestock is still a wealth-building strategy in rural America. A breeding pair of cattle purchased for $3,000 can produce a calf worth $800 to $1,200 every year. A flock of 20 sheep generates $2,000 to $4,000 in annual lamb and wool sales. The animals convert grass into money on a schedule that no bank controls. Your great-grandparents measured wealth in head of cattle. The measurement still works. Number 2. Producing everything the household consumed. A self-sufficient household in 1840 produced its own food, fuel, soap, candles, cloth, furniture, tools, and medicine. The cash economy barely touched daily life. A family that grew its grain, milked its cows, smoked its meat, wove its fabric, and built its structures needed cash only for salt, iron, glass, and the occasional luxury. Everything else came from the land and from the skill of the people on it. That self-sufficiency was income by another name. Every pound of butter the family made was a pound they did not buy. Every shirt sewn at home was a shirt not purchased. Economists estimate that home production accounted for 50 to 60% of a typical farm family's total economic output before 1900. The wages they earned were the smaller part of their real income. Full self-sufficiency is impractical for most modern families, but partial self-sufficiency still saves thousands annually. A family that grows 30% of its food, does its own basic repairs, and makes its own cleaning and household products eliminates $5,000 to $8,000 per year in spending. Every dollar not spent is a dollar not earned, and unlike earned income, the savings are never taxed. Number 1. Trading on reputation instead of credit scores. Before the banking system reduced every American to a 3-digit number, your ability to do business depended on something that could not be calculated by an algorithm: your name. A man whose word was good could borrow a plow, buy supplies on account, partner on a land deal, and secure a season's worth of credit from the general store based on nothing but the fact that everyone in town knew he paid what he owed. That reputation was built daily. Every debt repaid on time, every handshake honored, every promise kept added to a man's standing in the community. The standing was worth more than cash because it opened doors that cash alone could not. A man with money but a bad name could not get a loan from his neighbors. A man with no money but a solid reputation could get anything he needed and pay for it when the harvest came in. The banking system replaced reputation with credit scores because reputation does not scale. But in local economies and tight-knit communities, reputation still operates exactly as it did in 1820. The contractor who does honest work gets referrals. The neighbor who returns borrowed tools gets to borrow again. Banks made reputation obsolete on paper. In practice, it remains the oldest and most reliable currency Americans have ever used. 20 skills. None of them required a bank account, a credit score, or a financial advisor. All of them built real wealth for real families across 2 centuries of American history. The banking system made money management more convenient. Whether it made it better is a question worth asking, because the families who operated without it were not struggling for a system to save them. They were too busy building one of their own. Tell us in the comments, which of these skills does your family still practice? Which one are you going to learn? And which off-grid money skill did we miss that deserves a spot on this list? Drop it below. We read every single one. If this list changed how you think about money and independence, hit that like button and subscribe so you never miss a video. Tap the bell for notifications. Share this with someone who needs a reminder that Americans built wealth long before the banks told them how. We will see you in the next one.